Ever wondered how day traders make their decisions? Welcome to the fast-paced world of day trading, where quick decisions can mean the difference between profit and loss. In this realm, there's no room for guesswork. Instead, we rely on proven strategies to guide our choices. We'll be exploring 3 such strategies today: technical analysis, momentum trading, and scalping. Technical analysis is all about using price charts and indicators to make short-term trading decisions. Then we have momentum trading, which capitalizes on short-term price trends and market momentum. Last but not least, we'll delve into scalping, a strategy that involves making multiple quick trades to exploit small price movements. These strategies may sound complex, but fear not. We're here to break them down, making them simple and accessible, even if you're just starting out. Ready to delve into the world of day trading? Let's start with our first strategy: technical analysis. Technical analysis sounds complicated, right? Well, it isn't. Imagine you're a detective and the market is your crime scene. The price charts and indicators you see are like your clues. You're not just looking at them, you're studying them, trying to understand what they're telling you about what might happen next. That's the essence of technical analysis. Picture a price chart. It's not just a bunch of lines and numbers. It's a story of how a particular stock or currency has behaved over time. And just like any good story, it has patterns. You see, markets tend to repeat themselves. This repetition forms trends and patterns that can be studied and used to make informed trading decisions. Let's take candlestick charts, for example. These charts, originating from Japan over 3 centuries ago, are like the pulse of the market. Each candlestick represents a specific time frame and tells you 4 key pieces of information: the opening price, the closing price, the highest price, and the lowest price during that time frame. Studying these can give you insights into market sentiment. For instance, a long-bodied candlestick with short or no shadows suggests a strong direction in the market. This could be your clue to jump in and ride the wave, but the plot thickens. We also have technical indicators, mathematical calculations based on a security's price and volume. They're like your magnifying glass, helping you see things not immediately apparent. For instance, the moving average can help you identify a trend, while the relative strength index can tell you if a security is overbought or oversold. Now, technical analysis isn't a crystal ball. It can't tell you the future with absolute certainty, but it's a tool, a powerful one at that, which can help you make educated guesses about what's likely to happen next, based on what's happened before. So there you have it. Technical analysis is about studying the past to predict the future. It's about connecting the dots, understanding the patterns, and making smart, informed decisions. It's about being that detective, solving the mystery of the market. Remember, technical analysis is all about studying the past to predict the future. Now let's move on to our next strategy: momentum trading. Scene script. Ever watched a snowball rolling down a hill, gaining speed and size? That's momentum trading for you. Picture this. A snowball begins its journey down a hill. As it rolls, it gathers snow, growing larger and moving faster. This is the perfect metaphor for momentum trading. It's all about identifying a stock that's moving in a certain direction, and then jumping on board to ride that momentum. Momentum trading is a strategy that involves capitalizing on short-term price trends and market momentum. The idea is to spot a stock that's already on the move, and then buy or sell in the direction of that movement. But why would a trader choose to follow the crowd, you ask? Well, markets are driven by emotions. Fear and greed are powerful motivators, and they can often push a stock's price far beyond its true value. This is where momentum traders step in. They seek to profit from the extreme swings in sentiment, buying when the market is euphoric and selling when it's gripped by fear. The key to successful momentum trading is identifying stocks that are moving significantly in one direction on high volume. You see, volume is a crucial factor here. It provides a measure of the strength of the price move. A high volume suggests that the move is supported by the market participants, increasing the likelihood that the trend will continue. As a momentum trader, you're not concerned with the intrinsic value of a stock. You're simply looking to profit from price movements. It's like surfing, where you're not interested in the depth of the ocean but the strength of the wave. But remember, momentum trading isn't for the faint-hearted. It requires discipline, a keen eye for trends, and the ability to act quickly. You need to be able to spot the snowball at the top of the hill before it starts its descent, and then hop on for the ride. So, if you have a knack for predicting scalping, no, it's not what you're thinking. It's a trading strategy, a fascinating one at that. Imagine a hummingbird hovering near a flower, taking in tiny sips of nectar. That's what a scalper does in the trading world, making multiple quick trades to exploit small price movements. Now, the essence of scalping is speed. It's all about getting in and out of the market, making swift decisions, and capitalizing on tiny fluctuations in price. And when we say tiny, we mean it. We're talking about a fraction of a percent here. But as a scalper, your goal isn't to hit the home run with a single trade. Instead, you aim to make small profits on each trade. Think of it this way. If you're a scalper, you're not looking to feast on a single big win. Rather, you're looking to snack on lots of little wins. It's like collecting pennies. One penny might not seem like much, but a jar full of pennies can add up to a pretty penny indeed. Now you might think, well, that sounds easy. I can do that. But here's the thing. Scalping is exciting, but also demanding. It requires a keen eye, quick reflexes, and an unwavering commitment to your trading plan. It's not for the faint-hearted or the indecisive. It's for those who thrive in a fast-paced environment and who can make quick, confident decisions. So, if you're someone who enjoys the thrill of speed, the exhilaration of quick decision-making, and the satisfaction of seeing small gains add up, then scalping might just be the trading strategy for you. But keep in mind, it's not a get-rich-quick scheme. It's a strategy that requires patience, discipline, and a solid understanding of the market. And like any strategy, it comes with risks. So, tread carefully and always trade responsibly. Scalping might be fast-paced, but remember, slow and steady wins the race too. Let's recap what we've learned today. Scene script. Woo! That was a lot to take in, wasn't it? But don't worry, we'll go over everything once more. Let's start by revisiting the first strategy we discussed. Technical analysis. This is the art and science of reading price charts and indicators to make short-term trading decisions. The key is to identify patterns and trends in the market that can predict future price movements. You're like a detective looking for clues in the data and making informed decisions based on what you find. Next, we talked about momentum trading. This strategy is all about riding the wave. You capitalize on short-term price trends and market momentum. It's like surfing. You watch the waves, wait for the right moment, and then ride it all the way to the shore. The trick is knowing when to jump on and when to get off to avoid wiping out. Then, we moved on to scalping. This is a high-speed, high-stakes strategy where you make multiple quick trades to exploit small price movements. It's like playing a fast-paced video game. You're constantly in action, making split-second decisions. But remember, with great speed comes great responsibility. To be a successful scalper, you need to be alert, quick, and disciplined. Now let's talk about the underlying principles that apply to all these strategies. First and foremost, understanding market trends is crucial. Whether you're using technical analysis, momentum trading, or scalping, you need to have your finger on the pulse of the market. Second, decision-making speed is key. In the world of day trading, seconds can mean the difference between profit and loss. So you need to be able to analyze data quickly and make decisions on the fly. Lastly, a good grasp of technical analysis is essential. This is the foundation upon which all these strategies are built. Without it, you're just guessing. So take the time to learn the basics. It will pay off in the long run. Before we wrap up, let's talk about the elephant in the room: risk. Day trading is not a guaranteed way to make money. It's risky, and it's not for everyone. But with the right tools, knowledge, and mindset, it can be a rewarding endeavor. Remember, every trader has a unique style. It's all about finding the strategy that fits you best. So, are you ready to start your day trading journey?